Welcome, D-traders. You are watching a recap of the Asian session. Yesterday, there were lots of crucial political and economic events. Wall Street closed the trading on a pessimistic note due to mixed reports. Asian stock markets, on the contrary, were more resilient. Let's discuss the main highlights of the Asian trade. Among yesterday's earnings reports, there were positive ones. Goldman Sachs, Morgan Stanley and CitiGroup published upbeat results. However, investors were discouraged by a decrease in Wells Fargo's profit by 4.6%, a modest 0.5% increase in retail sales, and a spike in initial jobless claims. In addition, US Treasuries, as we expected yesterday, resumed an upward movement after today's decline. The pressure increased mostly on the tech stocks. As a result, the NASDAQ index sank by 4.4% over the week. And what's more, there are many disturbing pieces of news from Ukraine and Europe. It also soured the sentiment in the stock market, so the main US stock indexes finished the week with a drop. Trading floors will reopen only next Monday. Today, markets in Australia, the United States and the UK and some other countries are closed on the occasion of a Good Friday. As widely expected, the US dollar climbed higher amid the worsening geopolitical situation and the rally in the bond market. Apart from that, it has been rising for some time amid expectations of a monetary policy tightening. Besides, the ECB did not announce any changes yesterday, which was bearish for the euro. The regulator refrained from hiking the key rate. The European Union is going through hard times now, as it has ditched Russian oil and gas supplies. This is why European business has to adapt to new realities because of the anti-Russian sanctions. As long as the interest rate remains at -0.5% and the ECB maintains a dovish approach, the euro will remain weak. Judging by the ECB's rhetoric, the euro may start a long-term downtrend. So, yesterday it fell to 23-month low versus the US currency. The US dollar index is gaining momentum against its main rivals. It edged higher by 0.64% over the week. On Thursday, it recovered to a two-year high of 100.78. Today, it has already approached 104.55, and it's likely to stay within the channel of 100.40 and 100.57. The yen is also no competitor to the greenback. The main reason is the huge rate gap between the Fed and the Bank of Japan. The situation is quite extraordinary. While the world's largest economy is aggressively raising the key rate, the third largest economy is going against the global hawkish trend, keeping the rate near zero. Time will show whose stance will be more appropriate and beneficial for the country. This week, Japanese Finance Minister Shinichi Suzuki said that the government is closely watching currency moves, including the recent yen weakening and its impact on the Japanese economy. Analysts believe that the probability of a currency intervention increases as the yen is heading for the critical price range of 127 and 130. In the meantime, the US dollar has been rising against the yen for the sixth week in a row. As the result, the dollar-yen pair has touched a 20-year high of 126.56, and today it gained 1.71%. At the moment of making material for this video, it was trading at 126.45. At the end of the fiscal year in March, the Bank of Japan made huge cash injections into the market to reduce the yield of government bonds. The yen lost ground because of it. This is why it's currently the lowest yielding currency in the basket. And today the pair is moving in the intraday upward corridor of 125.85 and 125.70. The trajectory of the Aussie is rather different. On Wednesday, it approached the three-week low around the 0.7392 level amid a pullback of the US dollar. It even tried to rise higher on Thursday. However, it lost momentum, and now macro and fundamental stats for the Aussie are mixed. Yesterday, economic reports showed an increase in inflation, high unemployment and an overheated labor market. Yet the Reserve Bank of Australia meeting will be held only in June, although the regulator has already dropped its patient approach. It's still unclear whether it will hike the rate next month. At the same time, market participants are betting on the first rate increase in a decade in June. However, the Australian dollar was unable to maintain growth solely to expectations of a monetary policy tightening. It's slid down. So at the moment of preparing material for this video, it was trading at 0.7410, and today the AUD USD pair is consolidating in the downward range of 0.7400 and 0.7427. And that's all for now. We will be glad to receive feedback, so don't hesitate to leave your comments down below. InstaForex team wishes you a good weekend and Easter holidays. Everyone needs a friendly and cozy atmosphere as well as family support regardless of their religious beliefs. See you after the weekend.